If I asked you the question, what is humanity's greatest invention? What would your answer be? Would it be fire, the force that cooks our meals and keeps us warm? Or perhaps the wheel, the genesis of trade and travel? While these are monumental creations, there's another contender we often overlook: money. But here's the twist. Money isn't just an invention, it's an illusion, a construct that holds no intrinsic value yet dictates every facet of modern life. But before we dive into this interesting story, make sure to give this video a thumbs up and subscribe to our channel so you never miss out on stories like this. Now, let's unravel the enigma of money, humanity's biggest illusion. A world without money. Chaos or simplicity? Imagine a world without money. Instead of swiping cards or trading notes, you'd be bartering. Have a tent to trade? Hope someone nearby needs shelter and has the fresh produce you're craving. The barter system may sound quaint, but it was riddled with inefficiencies. Could humanity have thrived with such a chaotic exchange system? Or was the creation of money inevitable, born out of sheer necessity? The introduction of currency simplified trade, allowing societies to grow and economies to flourish. Bartering to banking, humanity's financial evolution. Are modern financial systems a progression of convenience or a deeper entanglement in money's illusion? Before coins and currencies, societies relied on barter systems, trading goods and services directly. A farmer might exchange wheat for a blacksmith's tools, but this method was limited by mutual needs. As civilizations grew, the inefficiencies of barter paved the way for centralized currencies. Banking soon followed, offering a secure place to store wealth and mediate transactions. Commodity money, a step towards order. The barter system's inefficiencies led to a game-changing solution: commodity money. Common goods like salt, animal skins, and even beads became placeholders of value. These items were universally desirable, making transactions smoother. But even this system had a flaw. How do you assign constant value to objects that vary in availability and demand? The shift to metals like gold and silver offered a solution. These materials were scarce, durable, and divisible. The stage was set for the next chapter in humanity's economic story. But was this the birth of value, or just the start of the illusion? The illusion takes root. Metal coins and the first mints. Before coins, societies operated through barter, exchanging goods and services directly. While effective for local trade, it was inefficient for long-distance commerce or transactions involving disparate values. Enter King Alyattes of Lydia in 600 BC, who revolutionized trade by creating the first standardized currency. The coins, composed of a gold and silver alloy called electrum, bore official markings that guaranteed their weight and value. The power of stamped authority. The introduction of stamped denominations brought an element of centralized control. Coins weren't just currency, they were symbols of power, trust, and governance. When a ruler's face or emblem appeared on a coin, it wasn't merely a guarantee of authenticity, it was a declaration of authority. The illusion that money's value rested solely on government decree began to take root. The role of kings and rulers in shaping money's perception. Kings and rulers played pivotal roles in the evolution of money. Early monarchs, like Alyattes of Lydia, established official mints, creating standardized coins to streamline trade and exert authority. These coins often bore royal symbols, reinforcing their legitimacy and the ruler's influence. Over time, leaders discovered that money could be a tool for power. From metal to paper, the birth of fiat. While metal coins revolutionized trade, they presented logistical challenges, particularly for large transactions or long-distance trade routes. Lugging sacks of coins across continents was impractical, and theft posed a constant risk. The solution emerged in the form of paper money, initially issued as promissory notes redeemable for gold or silver. The rise of banknotes. Trust in institutions. Early banknotes, such as those introduced by the Tang dynasty in 7th century China, were backed by tangible assets like gold. This tangible backing provided a sense of security, making it easier for people to embrace paper money. However, as trust in banking systems grew, the direct link between paper money and precious metals began to dissolve. The modern mirage. Fiat currency from gold standard to floating value. The 20th century marked the final severance between money and physical assets. The US abandoned the gold standard in 1971, transitioning entirely to fiat currency. This change gave governments and central banks unparalleled control over monetary policy. Money became a digital abstraction, existing mostly as numbers in bank accounts and ledgers. Trust. The invisible backbone of modern money. The modern financial system relies on trust at every level. People trust banks to safeguard their savings. Businesses trust currencies to maintain their value. And governments trust central banks to manage inflation. But this trust is fragile. A crisis in confidence, such as a bank run or hyperinflation, can unravel the illusion. The consequences of printing money. Inflation occurs when the supply of money outpaces economic growth. While modest inflation is considered healthy, excessive money printing can devalue currency and erode purchasing power. The COVID-19 pandemic starkly illustrated this phenomenon. To stimulate economies, central banks injected trillions into circulation. The result? Prices for everyday goods skyrocketed, from groceries to building materials. Savers found their money losing value, and low-income families bore the brunt of rising living costs. Historical lessons. Hyperinflation in action. History provides grim examples of unchecked money printing. In the 1920s, Germany, hyperinflation rendered the mark virtually worthless. Workers carried wheelbarrows of cash to buy bread. More recently, Venezuela faced similar turmoil, with its bolivar losing nearly all its value. These examples underscore the dangers of relying too heavily on fiat currency without robust safeguards. Debt, the fuel of the illusion. Borrow now, pay later, with interest. Governments worldwide fund their operations through borrowing, issuing bonds to raise money. While this system allows flexibility, it creates a cycle of dependency. Debt repayment often involves issuing more debt or printing additional currency, perpetuating inflation. The growing debt crisis. Global debt levels are reaching alarming heights, with many countries borrowing far beyond their capacity to repay. This unsustainable model raises questions about long-term economic stability. How long can this system persist before it reaches a breaking point? The rich get richer. Assets versus cash. In an inflationary environment, cash loses value while assets like real estate, stocks, and gold tend to appreciate. Savvy investors leverage this dynamic to grow their wealth, creating a widening gap between asset owners and those who rely on cash savings. The wealth gap and economic inequality. This divide exacerbates economic inequality. While the wealthy diversify their portfolios, the average individual often struggles to keep pace with rising costs. The illusion of money not only sustains the system, but also perpetuates systemic disparities. Cryptocurrency. A new illusion? Cryptocurrency emerged as a response to the perceived flaws of fiat currency. Bitcoin, the first and most prominent digital currency, offers a decentralized alternative. Its scarcity, capped at 21 million coins, contrasts sharply with the unlimited printing of fiat money. The volatility dilemma. Despite its promise, cryptocurrency remains volatile. Prices can soar or plummet within hours, making it a risky store of value. Moreover, its reliance on collective belief mirrors the same principles underpinning fiat money. Is crypto truly a solution, or just a high-tech iteration of the same illusion? The psychological grip of money. Why does the illusion persist despite its flaws? The answer lies in psychology. Money symbolizes security, power, and freedom. These attributes are deeply ingrained in societal values, reinforced through daily interactions and cultural norms. Trust as currency, the backbone of modern economies. What truly underpins our monetary systems? Trust. Whether it's a coin, a dollar bill, or a Bitcoin, the value is not intrinsic but derived from collective agreement. This trust extends beyond individuals to institutions, banks, governments, and corporations. However, trust is fragile. Economic crises, such as the 2008 financial meltdown, showcase how quickly faith in systems can erode. When Lehman Brothers collapsed, it wasn't just a bank that failed, it was confidence in the global financial framework. Can humanity escape the illusion? Reimagining value. Breaking free from the psychological chains of money requires a fundamental rethinking of value. What if wealth were measured not by currency, but by access to resources, knowledge, or well-being? Such a shift would challenge deeply entrenched norms, but could pave the way for a more equitable society. The role of education. Educating people about the history, mechanics, and consequences of monetary systems is crucial. Awareness can empower individuals to make informed decisions, whether that means diversifying investments, advocating for policy changes, or exploring alternative systems of exchange. The endgame. What lies ahead? As inflation climbs and wealth gaps widen, the cracks in our monetary system become harder to ignore. Will governments innovate to preserve the illusion, or will new systems emerge to replace it? The rise of decentralized finance and blockchain technology hints at a shift. But one question remains: can any system truly transcend the illusion? So, what do you think? Could you imagine a world without money as we know it? A world where our worth isn't measured in dollars and cents, but in something deeper, something more human? Or are we so deeply tied to this system that breaking free feels impossible? I'd love to hear your thoughts, your hopes, your doubts, your dreams for a different future. Drop a comment below, and let's keep this conversation going. And if this resonated with you, if it stirred something inside you, don't forget to like, subscribe, and share this with someone who needs to hear it. Together, we can question the norms, challenge the rules, and maybe, just maybe, imagine something better. Thanks for watching, and I'll see you in the next one.